Welcome back to our channel. In today's video, we're diving deep into the issue of money laundering, particularly in the United Kingdom. Did you know that the UK is the second worst money laundering hotspot in the world, second only to the United States? Right, let's get into it. According to research from Credis, a staggering £88 billion is laundered every year through the UK. That's a mind-boggling amount. And it gets worse. Money laundering represents a shocking 4.3% of the UK's GDP compared to just 1.4% in the US. So no wonder the UK's government is cracking down on the issue. The UK government is increasing pressure on businesses to perform anti-money laundering checks, and it's not without reason. Criminals and corrupt foreign regimes engage in money laundering to disguise the source of illegally obtained funds. They want to make their ill-gotten gains appear legitimate. So, let's delve into the 3 stages of money laundering and see how it all works. But before we start, let's define money laundering. Money laundering is the process of disguising the source of illegally obtained money. Criminals engage in activities like drug trafficking, terrorism, tax evasion, fraud, theft, and embezzlement. They take this dirty money and mix it with the legitimate earnings by channeling it through a business. This process allows them to introduce the money back into the economy while making it difficult for law enforcement to trace back to them. Now, let's talk about the 3 stages of money laundering: placement, layering, and integration. The first stage is placement. This is when illegal money is separated from criminal activity and introduced into the legitimate financial system. It is usually broken up into smaller, less suspicious quantities and deposited into various bank accounts. Techniques used during this stage include mixing illegal profits with business takings, invoicing for products or services that haven't been purchased, using trusts and offshore businesses, and depositing small amounts of money in foreign bank accounts. The second stage is layering. Once the money is in the legitimate financial system, it's passed through a complex web of transactions to complicate the trail and make it harder to trace back to the criminals. Techniques during this stage include gambling at casinos, purchasing securities or assets like property, funneling funds through holding companies, buying foreign currencies that don't comply with anti-money laundering regulations, and even using cryptocurrencies and unregulated assets. Finally, we have the integration stage. At this point, criminals integrate their funds into the economy, making them appear to come from legitimate sources. They invest the laundered money in properties, shares, and luxury assets, which further legitimizes their ill-gotten gains. Techniques used during this stage include creating fake employees and paying into their bank accounts, paying loans they won't repay, and distributing dividends to shareholders of a company. Now we understand the stages of money laundering, let's explore some common techniques used by criminals in their illicit activities. The first technique is blending, where criminals mix dirty money with their legitimate earnings of a business. They often target cash-based businesses like car washes, betting shops, bars, and tanning salons. This term, money laundering, actually originated from criminals using laundrettes to hide the proceeds of their crimes. Another technique is smurfing. This involves splitting large amounts of dirty money into smaller transactions. The funds are deposited into multiple bank accounts over an extended period, making it harder for banks to detect. Smurfing gives the appearance of legitimate activity while keeping a transaction value too low to trigger anti-money laundering regulations. Next, we have invoice fraud, where criminals over or underbill for goods or services through a company. By manipulating invoices, they can keep the excess money, which now appears to be legitimate spending. However, discrepancies in accounts or stock levels can raise suspicion. Offshore accounts are also a common method for money laundering. Some countries have lax regulations, making it difficult for authorities to identify the true owners of these accounts. This secrecy makes offshore accounts attractive to criminals looking to hide their illicit funds. Criminals may also choose to deposit cash abroad by carrying it overseas and placing it in foreign bank accounts. They do this with small sums of money to avoid customs declarations or anti-money laundering checks. Another technique is aborted financial transactions, where professionals like solicitors, accountants, and financial institutions assist criminals in transferring money into the legitimate financial system. The funds are temporarily placed in client accounts for supposed legitimate business transactions. However, the transaction is eventually cancelled and the criminal requests a repayment, making the money appear to come from a legitimate source. Lastly, we have shell companies. These entities exist only on paper and serve as a front for illegal money payments. They are frequently used during the layering phase of money laundering to divert and obscure funds. Now that we've explored the stages and techniques of money laundering, let's take a look at some real-world examples of money laundering schemes in the UK. In January 2023, 6 employees from a Staffordshire logistics company were sentenced to a combined total of 40 years in prison for their involvement in a money laundering scheme. These employees transported large sums of dirty money across the UK and abroad on behalf of criminal gangs. They collected the money from anonymous sources and delivered it to London for laundering. The gang helped launder more than £30 million. In another case, Santander UK plc was fined £107,793,300 for serious gaps in its anti-money laundering controls. During this time, a small translation company started banking with Santander, but millions of pounds started appearing in their account instead of making their expected deposits of around £5,000. The owners quickly transferred the dirty money to other accounts, and despite Santander agreeing to close the company's account, a severe delay allowed the criminals to launder millions of pounds. These real-world examples demonstrate the severity of money laundering and the consequences for the businesses involved. It's crucial to have robust anti-money laundering processes to protect your business and ensure compliance with the law. So be sure to check out the Red Flag Alert platform. That's all for today's video. Remember, staying informed about money laundering and implementing effective AML processes is essential for safeguarding your business and the financial system. If you found this video informative, make sure to hit the like button and subscribe to our channel for more insightful content. If you want to learn more about shell companies, check out our video on the topic here. Thank you for watching!